Hello, and welcome to Money Smart Week. Before we dive into today's insightful session, there are a couple of important points to go over. First, we're excited to inform you that today's session is being recorded and will be available for viewing on both our Facebook and YouTube channels within the next 24 hours. If you encounter any technical difficulties during this live event, please don't hesitate to use the chat feature to inform us, and we'll do our best to assist you promptly. Additionally, we invite you to actively engage with us through the chat feature. Feel free to send any questions or comments you might have during this live presentation. We're delighted to welcome you to today's insightful webinar, Navigating Tax Season Beyond the Deadline. Yesterday was tax day, and if you have not filed, you are in the right place. Today's subject matter expert is from the IRS and will guide you through strategies to tackle tax season, even if you missed the initial deadline. This webinar is packed with valuable insights to help you make the most of your tax return. We're honored to have our speaker for today, Mr. Andrew Van Singel, Territory Manager from the Internal Revenue Service, IRS. Mr. Van Singel, I will turn it over to you. Thank you for being here.
Very good. Thank you so much. Again, my name is Andrew Van Singel, and today it's the day after the filing deadline. We're going to talk to you about things to be on the lookout for, things that are good to know. If we have some questions, we'll hopefully be able to clear all that up for you. Not too many slides here, so we'll jump right into it. So on our next slide, we'll give you kind of an overview of what we're looking at to talk about today. If you owe money, usually a lot of people who owe end up waiting to the last minute to file. So this may be something that you filed a couple days ago, and now you're wondering, what do I do if I owe? We're going to talk about additional information that you can find on the IRS website, other services that are available, and some online tools. We'll talk about some scams, tax scams. We'll talk about the Taxpayer Advocate Service, and then we'll have an opportunity for you to ask questions. So on the next slide, you'll see most people know tax day every year is on April 15th. This year in Maine or Massachusetts, the deadline is actually April 17th because there's a local holiday in those states, and so the local government is shut down, and so the deadline is on the 17th. But as a general rule, April 15th, that's the day every year in which returns are due. However, if you live in a federally declared disaster area, you may be allowed additional time to file. There's also special rules for people who are deployed overseas or out of the country about their filing, the filing deadline. Okay, so next slide. You filed your tax return and you owe money. What do you do? Well, I guess it's too late now to file an extension, but if you are typically someone who has information that you don't get until very late, maybe you have a K-1 or you're waiting for some additional information, you can file an extension. And the really important point about an extension is it gives you more time to file, but it doesn't give you more time to pay. So if you end up owing, even if you filed an extension, you're going to be liable for a penalty. So if you do have to file an extension and you think you're going to owe, you don't need to get the correct amount, but just give a good faith estimate of what you're going to possibly owe. And then when you file your return, that whatever you send in with your extension, that gets credited to your account and offsets any balances that you may owe. So if you do owe, the IRS does have a lot of options in terms of collections. And so we have what we call a full pay in 120 days. Essentially, you can call up or go online and say, I don't have the money now, but I'll be able to pay this in full in 120 days. Essentially, it stops all collection, all enforcement action against the taxpayer, and gives you a little bit of a breathing room to get that payment over to the IRS. The IRS also has payment plans, and you can get into those by calling the IRS, or you can go online and set up a payment plan. There's also something called an offer and compromise. Offer and compromise is something that usually when you hear ads on the radio, this is what they are referring to. It's a Form 656. This is a way that you can settle your tax debt for less than what you actually owe. And without getting too deep into the specifics of it, generally what the IRS is looking at is what is your true ability to pay. So if you don't have a home, or you don't really have any equity in your home, and you drive a used car with not a lot of equity, or no equity possibly, and you kind of live in paycheck to paycheck, you'd be a good candidate for an offer and compromise in which you could settle those past year's tax debts for a fraction of what you may owe. And it really comes down to what your ability to pay is. So they kind of take what your monthly expenses are versus what your monthly income is. And I've seen people pay $50 to write off a tax debt of several $1,000s. And the benefit to the government is, why are we going to walk away from that tax debt? Is that part of an offer and compromise is a contract, and part of that contract is that you are going to stay in filing and payment compliance for the next 5 years. And so you can kind of get back into the system and contributing and paying your taxes on time. And if you don't do that within that 5-year period, they can reinstate that tax debt that was settled. You may also be able to get a temporary hardship and be put into currently not collectible status. This is, we see this a lot with our seniors who are on fixed income. They just really don't have any ability to pay. They can put you into this hardship status, which they may reach out every year or every other year to kind of check in to make sure that your financial situation has not changed. And essentially, the IRS is not going to take any collection action against you. They're required by law to give you a notice. I believe it's a CP 71A notice, and it will tell you each year what your total balance is, but you're under no obligation to pay that if you're in a hardship status. So those are some collection options that are available to you. And a lot of those you can do yourself. You don't necessarily need to pay somebody to do that. You can go online. The offer and compromise, it's a little bit of a longer form, but you have to put in some basic information about yourself and your financial situation. And I do have confidence that you could be able to do that by yourself. Next slide. I wanted to promote information on the IRS website. We're living in the age of Facebook, TikTok, Snapchat. And you probably have personally seen a lot of information from people saying, do this, do that. There's free money out there. You can deduct this, you can do that. And it all seems too good to be true. And a lot of times it really is. And so I would encourage you to, if you have questions or need information, the IRS website is a great resource for getting that information. On the top left-hand side of the screen, if you go in irs.gov, you can click on the link under file, and you can get information for individuals. On the next page, it has information. If you go to the next slide, you can access your online account. This is something that is relatively new within the last couple of years. Taxpayers can set up an online account with the IRS. It's really handy because you can get your transcript information. You can check the status of your refund. It will show you your most current year tax return, whether it was, whether you filed and whether the return was accepted. A lot of people have been getting these identity protection pins. It's a 5-digit number that gets sent to you from the IRS each year. It's a different number each year. Typically that gets sent out in December. You need that to e-file your return. So we get a lot of people come to a free tax prep site, or they go to their preparer to file a tax return, and they don't have that IP pin, or they just forget. So the preparer will submit the return and it gets rejected because there is no IP pin. So one way to do that is you could call the IRS. Sometimes you can get right through. Sometimes you may have to wait a little bit. But the great thing about an online account is you can easily retrieve that information. So again, would really encourage everyone to sign up for an online account and be able to get that information at your fingertips. And there's lots of other, on this landing page here, lots of other information if you want to look into filing past due refunds or common mistakes, or if you're looking to find the status of your refund, or what you received in your refund is different than the amount that you thought you were getting. There's a lot of self-help materials on here to help you kind of parse through all of that. And so there's also information on the next slide about the interactive tax assistant. And this is a handy tool. And you're going to be able to find more information for, how certain life events can affect your taxes and how to adjust your federal withholding with your employer or other payers, such as if you receive retirement income. That's a big issue we start to see at our tax sites at the end of the filing season, is that people are going to owe money, and really they need to change their withholding or the amount of money that's taken out of their paycheck from week to week. And so if you're one of those people who maybe you work 2 or 3 jobs, or you pulled money out of a retirement account, or your withholding was just not where it needed to be, you really should go and work on fixing that immediately, because we're already a quarter of the way through the year. And so if your withholding is not correct, you're going to run into this problem again next year. So you want to make sure you can, boost up your withholdings right now so that you, at the end of the year, you're not running into a situation where you owe. Now, oftentimes people ask me, the question is, should I do enough withholding so I get a big refund or a small refund or a small amount due? Personally, I feel like that's a personal preference. Some people like to get large refunds. Other people say you're giving the government an interest-free loan. I think it really comes down to a personal choice. A lot of times people use this as, a way of, forced savings, and that, this time of year, they can pay off a bill, or they can, whatever they get in terms of a refund, that's what they're going to use for a family vacation that summer. Again, it really comes down to a personal preference of, what you want to do. I will say, though, that if you do owe the IRS for a prior year, if you file a return and get a refund, that refund will automatically be what they call offset and be applied to your prior year balance. It really is important to get into a payment plan if you do owe, because the interest and penalty, there's several different types of penalties that you could be subjected to, and those penalty amounts change the more the account is, for lack of better terms, neglected. So generally, the penalty is a certain percent, and it goes up, I believe, like 0.5% each month until it hits a cap. But if you're in an installment agreement, some of those incremental increases in the penalties are going to not occur. So it's always in your best interest to, one, pay as much as you can by the filing deadline. That's another issue we run into, where somebody owes $5,000. They say, I got $3,000 now, but I'm going to be able to get the other $2,000 in a couple of weeks, so I'll just wait and pay it all when I have all of the money. You don't want to do that, because you're going to be paying a penalty on that full amount. If you make that payment by the filing deadline, then your interest and penalty amounts are going to be based on whatever remaining balance you have as of the filing deadline. So there's also on this page, there's information about, the interactive tax assistance and frequently asked questions. Again, there's a wealth of information on the IRS website, and I'd, encourage you to check that out. And if you look at the next page, we've got some more information here about the online accounts. Is a reference to publication 5533, which gives you more information about what is available at, or all of the kind of the menu of different things that you can get from an IRS online account. Another best practice, while we're talking about, transcripts and accessing information, when you get your return prepared, who you trust to prepare your return is a really important decision. If you pay somebody to prepare a return, they're legally obligated to sign that return. And so what I want you all to do is that if you paid somebody, number one, you should get a copy of the return. You should review that return before it's submitted. And you want to make sure that their information shows up on the return right below where you would sign or electronically sign. I believe it's on the second page of the 1040. There's going to be information about your preparer. And if you are paying anybody to prepare a return, they have to have their information on there. If they don't, it's a huge red flag. We see a lot of people in this community being taken advantage of by people who promise very large refunds, and they put information on the return that does increase the refund, but they're doing it fraudulently, and they're claiming income or deductions that didn't actually occur. They get a large refund. You're excited, you're going to get $9,000, and then they charge you $1,000 or $2,000. And you may say, well, that's a lot of money, but they got me a lot of money. So, perhaps they know more, they know the loopholes. So it justifies kind of a large a fee to prepare your return if somebody can get you a lot of money. What typically happens is the IRS is going to pick that information up in that return, and you're more than likely going to get audited. And once you do get audited, if that information is incorrect, you are going to be accountable for what's on the return or what was missing from the return. Just because you paid somebody doesn't mean you're off the hook. That's why it's really important to choose a tax preparer that's going to be reputable and trustworthy. Things you can do to check out who's going to be a reputable return preparer. The IRS has a database of credentialed tax preparers. They also have a database of people who participate in their annual filing season readiness program. You can look for people who have credentials like a CPA or an attorney. You can go online. You can go on, Google or look at Yelp or other type of websites that may review people and the work that they do. And you want to find somebody that's reputable and knows how to do this work, because there's a lot of kind of nuances with filing a tax return. And again, it's really important to pick a quality return preparer. Now, there's also something called the VITA program, and that's what I personally do. I run a team of people in Indianapolis, Springfield, and Chicago, and we help stand up volunteer income tax assistance, or VITA, and TCE, which is tax counseling through the elderly. So those programs offer free tax prep to people of low to moderate income and people with relatively simple tax returns. So we call that income guidelines and our scope guidelines. Scope means, generally we're preparing returns for people who have, W-2s, unemployment, gambling winnings. If you drive for like Uber or Lyft, you'll get a 1099 there. You might get Social Security statement. You may get a 1099 from a retirement plan. You might get a 1098-T from your college or university for tuition expenses. You may have student loan interest. I say that we do relatively simple returns, but we do handle a lot of different tax forms that taxpayers will commonly encounter. So even though it's simple, it doesn't mean that it's only, a W-2. When you go to those sites, they have a system set up in which they will interview you and figure out if you're within the scope of eligibility. So if you're not sure, you can go check out those VITA locations. In Chicago, the options for return prep after April 15th are very limited. I can say that Ladder Up is a nonprofit that does a significant amount of return prep throughout the city of Chicago. Some of you who are on this or watching this may have gone to Ladder Up to get your returns prepared, but they also do summer sessions at Harold Washington Library, which is actually only a few blocks away from my office. And they do those, I think, once or twice a month from now until October, until the filing extension deadline. So you'll want to go check out their website. Again, it's called Ladder Up, to get the specific dates and times in which they're doing that type of work. Now, there was a question in the chat here. Are you able to file past year returns using the IRS website? So the IRS, a couple of questions or statements there. The IRS has what they call the direct file program, and that was a pilot program that was available, I believe, in 13 states. Illinois was not one of those states, and so For direct file, which you may have heard about, is a way to file your return essentially through a platform that's similar to one of the larger big box type of return preparer organizations, and a way to do that at no cost. So that wasn't available in Illinois. You can't actually file a return on the IRS website. You can use a preparer or a software program through our Free File Alliance. So I think TaxSlayer, H&R Block, Jackson Hewitt, all of those traditional names that you may be familiar with do have the ability where you can go and access the software there at no cost. But there's each provider has different criteria for what qualifies to be to get that return prep done or to do it yourself at no cost. Sometimes there's an age requirement, sometimes there's income eligibility requirements, and so on and so forth. The IRS also has the free fillable form, so you can kind of, if you do your return by hand, you can kind of fill that out yourself and do it and submit it that way. I strongly caution people when they do that. I think in certain situations, maybe if you only have Social Security and the math isn't really complicated, it probably is a good option. But taxes can be incredibly complicated. There's a lot of different credits that are based on what your adjusted gross income is. There's things such as adjustments and deductions, refundable credits, non-refundable credits. The beauty of the tax software is that most people can really do this work themselves, because you're really just doing data entry. You're taking information from a W-2, and through the magic of technology, the computers do all the work for you and compute the numbers, assuming you're putting everything where it's supposed to go. So that's a plug for that. There's also, through our VITA program, we have something that we call FSA, which is Facilitated Self-Assistance. And so we do have a couple of programs throughout the city in which you can file your own return, and there may be somebody on staff to kind of help maybe answer some questions. But for the most part, you're really doing all the work. You're doing about 99% of the data entry, and there's people there to kind of help answer questions if you have it. And so that's an option as well to get your return prepared at no cost. Okay, so getting back into the slides here, if you want to go to the next slide, I put some resources available here about the links with the online accounts, the interactive tax assistance, how to get through on the phones, the publication 5136 for all of the different types of services, and then a very popular one, which is Where's My Refund? So if you filed your tax return in the last couple days, you can go on irs.gov/refunds, and you can use the tool to see where your refund is in the process. So I know I use when I get Domino's, they have the pizza tracker, and they show where your pizza's at in the process. It's kind of a similar setup here with Where's My Refund, in which you can see where it's at in the process. And generally speaking, if you do e-file, which is filing electronically, and direct deposit, which are two separate things, just because you do or don't have a bank account does not mean that you can or cannot file electronically. Want to make that point clear, because sometimes people assume e-file and direct deposit are the same thing and go hand in hand. That's not necessarily the case. But if you do file electronically and you get your refund electronically, generally speaking, the time frame to get that money is probably between 10 and 21 days. However, I have seen people getting their refunds in as little as 6 or 7 days. So we've done pretty good this year with the processing windows to get that those refunds to the taxpayer. So if it's after that time, it's been 21 days and you still don't have your refund, I would go back and check out Where's My Refund, because there may be an issue with your tax return that's causing processing delays. And I'll talk about some processing delays here in a few minutes, but we'll get through some of the other talking points here, and then we'll talk about some of those delays. Okay, so on the next slide, this is really important as well. Scams, phishing. Phishing is essentially, or spoofing can be where somebody purports to be the IRS and they're not. I've personally been contacted several times by people saying that they work for the IRS, and that if you just give us money now, we're not going to arrest you. So those are pretty much across the board scams. The IRS really doesn't interact that way. Most of the time, the first interaction that you're going to get from the IRS is through a letter. And so it's important to be vigilant against these phishing scams because, annually thousands of people lose millions of dollars to these tax scammers that are perpetrating fraud. Scammers are going to use their regular mail, telephone, or email to set up individuals or businesses or payroll and tax professionals and kind of take advantage of them every day. And again, the IRS doesn't initiate contact with taxpayers by email, by text messages, or social media. We're going to send you a letter if we're trying to get a hold of you. And so when that happens, hang up, or if you suspect that it could be legitimate, there's a way that you can call the IRS and verify information about the person that's calling you. But if it's a call out of the blue, I'd be very suspicious of that thing happening. The scammers are getting very sophisticated in how they scam. If you call me and ask for my badge number, I would tell you that number, and all it would take is a scammer to write that down and say, oh, this is Andrew Van Single, and here's my badge number. And if you called and said, does Andrew Van Single, is this his badge number? They would say yes. So even that is not a clear indicator that this is somebody who's not scamming you, because that information is readily available as well. So I always say, if you have a concern, hang up, call the IRS and see if you can get some more information as to the legitimacy of what's going on here. And also look into see what they're looking to do. If they're really trying to force you into a payment on the spot or getting, gift cards, again, those are things that are a clear indicator that something is not on the up and up here. So here's a couple of suggestions that you can take to protect yourself from being a victim of a phishing or identity theft. So one is to never overshare. So never give out your personal information over the phone to somebody that you didn't call, especially a social security number. Sometimes I've had these scammers call me and I kind of, maybe take the bait a little bit and kind of, really trying to see how they're doing this. And so one of the things that they've done with me is that they really don't know who they're calling, and so they're really relying on you to share that information to get more pieces of that puzzle. So they'll ask who they're speaking with. I say, hey, you called me, you should know who you're talking to, and they ask the address, or they'll ask for other personal information, and they may not be using it in that moment to scam you, but they could be putting that into a database to say, okay, we got his address now. If we call again 3 weeks later, we can get some more information. So don't overshare. Certainly don't ever give your social security number out to anybody unless you have a legitimate reason to do so. Be cautious of using public Wi-Fi. A lot of times when you check your bank balance and you're using public Wi-Fi, it's an unsecured network, so people could hack into that. Another thing is links. Don't click on links in texts or emails, especially if they're coming from suspicious sources. I've been on social media and I see people will write in the comments, they'll say, oh, click on this link. And sometimes that can be a way to get what they call like a keylogger, where essentially it's going to record every keystroke that you take on your computer. And so once you put in an email, they know you're probably logging into something, and that's how they can get your passwords there. So be very vigilant against, clicking on links that you don't have any business clicking on. The same thing goes for attachments, unless again it's something that you're anticipating or somebody that you know and trust. Otherwise, if it's from an email that you're not familiar with, really resist that temptation to click on the link or on the attachment. So a couple of things you can do to protect yourself against those scams. On the next slide here, we do have tax alerts talking about some of the scams that are going on. And so you can find some more information about this. The IRS recently warned taxpayers to be on the lookout for a new scam mailing that tries to mislead people into believing that they're owed a refund. So they may send you a letter saying, hey, we think you're entitled to a refund. Give us some, the way the scheme works is that the the mail coming in a cardboard envelope from a delivery service. The letter includes the IRS letterhead and contact information to somewhere that does not belong to the IRS, and wording that will say in relation to your unclaimed refund. So be on the lookout for that. The other big issue that we've seen in the last couple of years is this employee retention credit. I'm almost 100% confident every person who's watching this in their voicemail right now has a message from somebody saying, because you have 10 employees, we can get you all this money. And so that's what they're referring to as these employee retention credit, which through the pandemic was a legitimate credit that employers could get for keeping their employees hired during the height of the pandemic. But a lot of people were going out and putting in false information for either businesses that didn't exist. They were charging large fees, and that money was going out. And now the IRS is starting to catch up and look at those and question some of those. So be very suspect of those employee retention credit schemes. Lots of other schemes and scams that are going on, but use your best judgment and try to stay vigilant on that. One other resource on the next page is to talk about Taxpayer Advocate Service. Before I came over to SPEC in the IRS, I actually worked for Taxpayer Advocate, and I ran the Chicago office for about 5 years. And Taxpayer Advocate is an independent organization within the IRS, and they exist to help taxpayers when the system doesn't work as intended. So that could be a situation where you've tried to do all the things that you were expected to do. So you got a letter or notice, you responded to it, you never heard back. You were supposed to get a phone call or a return phone call, and it never happened. Maybe you filed an amended return, it's going on 6 months, and the process just does not seem to be working as intended. You can go to Taxpayer Advocate, and a large part of what they do is what they call case advocacy. So they actually work cases. And there's a number there, that 877-777-4778. You can call that number and talk to somebody in their intake department, and they will see if it's something that they can help you with. And so on the next slide, you can see the benefit of working with Taxpayer Advocate is you're going to talk to one person. You're going to get assigned a case advocate that's going to take your case from start to finish. And that's very unique to IRS, because if you call the IRS 1,000 times, you're probably not going to get the same person twice. Or maybe if you call 1,000 times, you just by chance hit a same person twice. If that ever happens, go buy a lottery ticket, because it's incredibly rare that that would ever happen. And so it's a frustrating experience for taxpayers, because if you have to call 6 times about your issue, a lot of times these situations are very frustrating. They're traumatic. You have to explain the situation every single time. You don't have to do that when you go to Taxpayer Advocate, because you're going to deal with one person that's going to take your case from start to finish. Other types of cases that they may help with are situations in which you have an immediate economic hardship. So maybe you need your refund, you amended your return, and they say it's going to take 16 weeks. But that amendment, you're supposed to get a few $1,000s, and you're going to use that refund to stay in your home, to pay your mortgage, or to pay your rent, and to stave off an eviction or a foreclosure. In certain circumstances, Taxpayer Advocate could actually help facilitate that, getting processed a little bit quicker and getting that money to you so you can avoid that irreparable economic harm. So that's something that you should look into as well. So on the next page, excuse me, you can see some other programs that Taxpayer Advocate administers, which is one, the Low Income Taxpayer Clinic. So this is also something that I did before I came over to government. I ran a low income taxpayer clinic for Prairie State Legal Services. They are a legal aid agency that operates in 36 counties in northern and central Illinois. They actually don't do anything in Cook County. The Legal Aid Chicago actually does that work in Cook County. But I ran a low income taxpayer clinic, and what they do there is really anything that is not return preparation. So if you get a letter, or if you have an examination, or you need to go to appeals, or if you need to go to tax court, Those clinics operate at no cost for people who are generally under 250% of the federal poverty level. However, they do have discretion to help people over their income eligibility. I think they can take 10% of their cases can be over that amount. And they also don't have an income limit to providing advice. So if you're way over their income guidelines, they might not represent you, but they can walk you through what you need to do to get answers on your tax issue. Another program that's available is the Taxpayer Advocacy Panel. So this is actually a program that, believe it or not, I was a member of Taxpayer Advocacy Panel. Seems to be I'm a jack of all trades today, but TAP is 75 volunteers across the country who may or may not have a background in tax. But essentially what they do is they do outreach in the community to try to make improvements to the IRS. And so that's something those volunteers apply through USA Jobs, and it's kind of on a rolling basis. But there's a link there to get some more information about Taxpayer Advocacy Panel. So I did see a question in the chat that I did miss, so I don't know if they can retype in that question because it disappeared from my my list here. But I did want to talk about processing delays and the importance of getting it right the first time. Okay, so the question here is, can amended returns be sent online? Generally, yes. If you're amending a return, you can e-file that. There's a certain look back period, though, if it's an older return. I think it's after 2 or 3 years, an amended return has to be paper filed. But I believe for current year and the 2 prior years, you can file those, you can amend those electronically. Another question we have in the chat is, if you complete your 1040 yourself and made a mistake, will the IRS catch it and give you the refund? Well, there's a lot to unpack there. So it depends what the mistake is. And if you're filing electronically, there's mistakes that can occur where the return won't get transmitted. So let's just say that you filed your return and you made a mistake with your social security number. That return is not going to get processed because it's going to match your name with your social security number based on the IRS's database. And if you have a mismatch there, it's going to get rejected. Typically, the rejection, there's hundreds of different reasons it could be rejected, and it will tell you what the issue is. So it could be, and most of the time when you get a reject, it's because of transposing a number with maybe your employer's EIN, your dependent child, you, again, transposed a number. If somebody else claimed your child as a dependent and they filed first, it automatically rejects the second one time it's filed. Then there's also mistakes that you could make that won't cause a reject, and those could still be kind of a devastating mistake you can make. And this is why you should always triple or quadruple check your direct deposit information. So your bank routing number and your bank account number. We see sometimes people make a mistake on the account number and the bank gets the money and they send it into the wrong person's account. When that happens, the IRS does not have any role in fixing that because our perspective is we sent the money where it was supposed to go. And so at that point, you have to kind of take it up with the bank. And I've heard a lot of horror stories with people not being able to resolve that. So I'll get to that question about the filing for 2020, but I wanted to kind of finish the answer on, if I make a mistake. So there's mistakes that it depends what the mistake is. So to give some specific examples, let's say you got healthcare coverage through the marketplace. You should have received a Form 1095A. And if you filed that return and didn't claim that or enter that information, that is going to cause your return to go into what they call error and rejects, or Irs, E-R-S. And you're going to get a notice from the IRS saying, we received your return. However, we know that you got healthcare coverage to the marketplace. So you're going to need to fix that by including that information and the reconciliation of that premium tax credit. There's other mistakes on the return, what they call math error. And so the IRS does have the authority to kind of fix on its own mistakes that you have made. And this is typically more prevalent with paper filed returns, but this could be a matter of, you put in your withholding was $40 and it actually was $400. They can automatically correct that in certain situations. We also have issues where a big issue we saw over the last couple of years is what we call pre-refund wage verification. And so, again, this is why you want to get it right the first time. 10 years ago, if you worked 4 different jobs and you got 3 W-2s and you couldn't wait for that last one, or they were slow to give it and you had that and you wanted to go file your tax return, you probably could have got the return processed and got your refund and amended later or got a notice. But the IRS has kind of enhanced the way it processes returns. And so those days are over. If you have a W-2 that you don't put on a tax return, you may be able to e-file electronically and it will get accepted. But more likely than not, the refund is going to be hung up in what they call this pre-refund wage verification program. And during COVID, because our work was significantly impacted, that could cause a delay in some cases of 11 weeks to 11 months. And so I know people out there are desperate to get that refund, but you want to make sure until you have everything to file that tax return. That's the best piece of advice I can give to anyone. If really 2 pieces of advice that you leave here today is get it right the first time, meaning wait till you have all the information, file a complete and correct return. And if you owe, the second piece of advice is to file on time and pay as much as you can by the deadline, and then work with the IRS on figuring out the rest of that balance due. So it's a tough question to answer as to whether the IRS will correct it or not. It really depends on what type of mistake that you made. But I always say it's in your best interest to self-correct, because if the IRS audits you and maybe that's a year or 2 years or 2.5 years later, and it turns out that you got more of a refund that you were supposed to get, when they recalculate what that amount was, it goes back to April 15th of that tax year. And so the interest and penalties is computed from that date. So I'd say if you know you made a mistake, try to get that return amended to get corrected. There was a question about somebody who hadn't filed returns in the last couple of years. Great question, because it brings up a really important point, which is if you're entitled to a refund, you have a 3-year statute of limitations to get that refund. And so 2020 returns were due the following year. And I believe the filing deadline that year was in May. So this was still kind of during COVID. I believe the filing deadline was May 15 or May 17 of 2021. You have 3 years from that date, so that would be May of 2024, to be able to file a return and be able to get your refund if you're entitled to a refund. And so if you didn't file in 2020, you may want to look into filing, because if you didn't get your stimulus check, you may be entitled to get what they call a recovery rebate credit, RRC. And so I would encourage anyone, if you haven't filed, to go out and file a tax return. Again, if you're in Chicago, Ladder Up can do those prior year returns. But just be mindful that, again, it's a 3-year statute of limitations for refunds. For the IRS to go back and examine or to essentially take enforcement action, if you haven't filed a return, there's no statute of limitations. So in theory, if you didn't file a return from 2005, could the IRS go back and do something for that tax year? Possibly, yes. If they haven't done it by now, they won't. But generally speaking, it's another reason why filing a return is a really important thing to do, because it kind of starts the clock in terms of actions that the IRS could take against you. And then the IRS generally is going to, in most situations, they have about 3 years in which they can audit a return that has been filed. All right, we've got a question in the chat. I loaned someone a large amount of money. They've not paid me back. Can I claim that amount on my taxes I lost? How does that work? You'd probably want to talk to somebody about that, but without answering your question specifically, let me talk about some basic concepts. So a loan is not considered income. So that's why if you go get a mortgage or a personal loan or whatever it is, and you get that money sent to you, $50,000, $5,000, whatever it is, you don't pay tax on that because there's an obligation for you to repay that. But there's something called cancellation of debt. So cancellation of debt means, I'll give you a good example of like a credit card. Let's just say you charged up $10,000, you couldn't pay it. You worked with your credit card company and said, listen, I'll give you $1,000 if you cancel the rest of it. And they say, okay, sign something, agree to that. You pay them the $1,000 and they write off the $9,000. You should then be getting what they call a 1099-C, and it's called cancellation of debt. And so the IRS treats that as taxable income. And so that may seem unfair, but the reason why is if they didn't, it essentially could just create a huge tax loophole and where people could just loan people money and say, don't worry about it, don't pay me back, and then no taxes ever being paid on that income. Now, there are exceptions to reporting that as taxable income if you're what they call insolvent, meaning you have more liabilities or debts than assets. You could be able to not include any or all of that as taxable income. I know right now there's a lot of talk about student loan forgiveness, depending on what type of forgiveness you get. I worked in public service for 10 years, and so I was eligible to get my loans discharged through that program. So that typically, again, it's cancellation of debt would be taxable, but there's a specific provision saying that this is not taxable. So in your situation, I don't want to answer that specific to your situation because I don't know the ins and out of it, but generally, if it is a loan and you have a document to kind of prove that it's a loan, in order for you to write that off, you would have to issue that person a 1099, which is, again, reporting that as canceled debt. And the other thing, too, is that once you issue that, that's it. You don't have a loan with that person anymore. So, like, that debt has been forgiven. So you're under no ability to essentially try to collect that. So you couldn't sue them and say, this person still owes me money because you would have canceled that debt. Okay, any other questions? We'll wait a few more minutes here before we wrap up. Good questions in the chat. A couple other odds and ends. If you're interested in volunteering in the VITA program, we just finished, obviously, it's April 16th, but in October and November, we start to ramp up recruitment for people to volunteer in this program. It is a very rewarding program. It is something that wherever you're at in your life, it's a good chance to give back. If you're a high school student or a college student, it's great experience. It's something great to put on a resume. Personally, I think it's something that's really impressive. If I see a high school or college student that's worked in this program, I'm very humbled by the people that I see at Trine University, Notre Dame, College of DuPage, Northwestern, Olivet College. All those people, all those institutions have sites and have students that are volunteering in that program. And it's really impressive because I know when I was 18, 19, 20, I definitely did not have that type of volunteer experience. If you're working, it's something that's good to put on your resume if you're looking to kind of advance in your career. If you're retired, it's a good way to kind of spend a couple months of your retirement. Most of the people that volunteer in the VITA program actually are not what we would call tax people. Tax people are very busy this time of year, and so they typically are not the ones who are volunteering. And so, again, we see teachers, college students, retirees, consultants. We see plumbers, electricians, all walks of life volunteer in this program, and it's a really good program to work with. We provide recognition to our volunteers. We give each year we give you a certificate. We have milestone certificates. We actually had somebody last year. We had, I think, 4 people across the nation that hit 50 years of service in this program, which is quite remarkable. Okay, so there's a question in the chat saying, perplexed how much I owe this year. First time ever, middle-aged, wasn't much, but they took it already. So, I don't know what was on your, that's actually a common thing where people will look at the return last year, and if it's off by more than, $20, they'll panic and say, why do I owe this much more last year versus this year? And it's really difficult to make that comparison. um, it's really difficult to make that comparison because your situation from year to year could change. So in one year, you could have pulled money out of a retirement account early and been subject to a 10% penalty, and then the tax on that. You could have got a second job that didn't withhold it the same amount. So really, when you're looking from year to year, I would say if you're going to do that, it's probably going to be a difficult, experience to figure out the true kind of what happened. But you want to not only look at your income, but you want to look at your total withholding, because really your tax return is a long math problem. You take the income that you earned, and there's certain policy things that reduce that income. So it could be contributing to a retirement account, student loan interest, going to college, itemized deductions like mortgage interest, property taxes. All of those things can contribute to what would reduce your actual taxable income. And then you look at what did you have withheld from your paycheck, and then what credits you would be entitled to. So did you get earned income credit, child tax credit? Did last year your child was in college and now they're overage where you can't claim them? So there's a lot of things that can go into that. But also, again, look at your return, make sure that all of the information, all of your income, all of your withholding is properly being reported. And that's something too, you could go to a VITA site and maybe they could look at your return and make sure that it was done correctly. So the question here about filing 2020 before going to do other missing years. So generally each year kind of stands on its own. So there's really no rhyme or reason to what return you should file first, or usually people do it all together, but you don't need to file 2020, wait for it to be processed and then do the next one and then the next one. The exception to that would be if you have carry forwards. And so again, that gets really technical, but if you have a relatively straightforward return, you're not applying your refund to the next year, you could be able to file that return. Now, one thing to note though is that if you owe, you file a return for 2020, if you owe and then file 2021, 22, 23 and get refunds, once that return processes, that money is going to go towards that prior year balance. So just keep that in mind. And I think that is it for questions. We're running on about 50 minutes here, 53 minutes. So I think we're scheduled for an hour. We can kind of keep it open for another couple of minutes if people have some questions. I think I was talking about the VITA program. That starts to ramp up recruitment efforts at the end of the year. I will say it's a very rewarding experience, but it's very tough your first time because you have to go through the certification. And it's one of those things where it's like kind of learning to ride a bike. Once you figure out how to do this work, each subsequent year that you go to volunteer and certify, it is significantly easier. We do a lot of the recruitment and a lot of the work to get certified is done at the end of the year. It's the holidays, lots of stuff going on. And so sometimes it kind of gets lost in the shuffle, but I would really encourage you to stick it out, take a friend or family member, and come out to these VITA sites. It's such a vital service that we provide to the community. They say the average cost of tax prep is around $250 to $300 if you pay somebody to do it. And so on any given Saturday, you could sit down and prepare, anywhere from 3 to 8 returns. And so you can save your community, maybe upwards of $2,000 in return prep, but also that money is going to stay in their pockets. We saw a lot of seniors who, instead of having to pay somebody, they don't get any money back, or maybe they get, $40 back. Now they get to keep all of that money or avoid having a bill just to get their return prepared each year. So, and if there's not a site near you, I would encourage you to look into starting up a site. Ladder Up, I had mentioned, does 15,000 returns a year, but they're kind of the exception to the rule. Some of these sites are run through churches, through local nonprofits like the United Way, and it may just be 3 or 4 people, that work together and do this work. I know of a couple of people where it's a husband and wife that do these returns and provide a tremendous service to their community. So I'd really encourage you to look into that. So kind of in closing here, if we don't have any other questions, again, best thing you can do right now If you had a unfortunate surprise of owing money, look into your withholding. Keep good documents and records. If you get coverage through the Affordable Care Act, make sure that information is showing up on your return. There's a lot of kind of strange things that you may get. You get a 1095-A for your marketplace information, unemployment, a lot of these things where you might not get them every year. You kind of forget to give them to your return preparer. Again, if you miss something, all of the documents that you receive, those get sent to the IRS as well. So it's a good, it matches the information. If something doesn't match, you're going to have problems, and the IRS is going to send you a letter. And most of it can get squared away. But again, if you're entitled to a refund, you know, you're going to be really wanting to get that refund, and you don't want to wait 11 weeks to 11 months to get it resolved. And that's what you're going to be looking at if you make a mistake on the return. And so, but there are resources available if you need assistance. So we will call it a wrap there. If you have any other, questions or comments, I can, I think my contact information is on here, but I would encourage you to, reach out to go on to irs.gov, lots of self-help materials that are on there. And we look to do other programs over the course of the summer as well. So thank you for your time, everyone.
Thank you so much, Andrew. This is a great webinar today. All of our attendees have learned a lot. We still have a few questions coming in, but if you are listening, this class is available for rebroadcast on our website, www.chicagocitytreasurer.com. You're also able to check this out on our Facebook channel and our YouTube channel. Again, thank you, Andrew, for being here with us today. We really appreciate it. All of your information will be shared in email that goes out to everyone who's attending this session today. So again, the encouraging IRS.com. Make sure you visit irs.gov, the website, and check out all of the self-help information that you see. We are continuing Money Smart Week tomorrow with a session with the Department of Housing here at the City of Chicago. If you're interested in renters advice, home ownership programs, make sure you tune in. We start tomorrow at 11 a.m. here online, www.chicagocitytreasurer.com, YouTube, Facebook, Instagram, and our Twitter channels. Again, thank you for joining us today, and have a great day. Bye-bye.